On today's show, 3 questions. Number 1, what did we miss? Number 2, so you want to get a Trump account? And number 3, did we just fix the housing problem?
Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Taylor. And I'm Rabih.
Yeah, you are. Guys, we're back.
Happy New Year.
We can say this still. Happy New Year.
First
For now,
episode.
this one show. This is it. This is it. I've learned my lesson. Happy New Year. Welcome back to I shouldn't say welcome back to 2026. Welcome to 2026. I'll probably be writing 2025 on anything that I have to write, like any forms or anything, till at least March, most likely. But it's good to be back, at least for this one show. I probably will be out after this for a bit. If you have been following along, the good thing is my daughter's leg is healed. I think we have an appointment today. The bad news is I am now going into surgery next week. So I'll probably be out after this one. But so it's good to come do a one and done show for 2026. Let's jump in, Rabih. What did we miss from the holiday break?
I collected some economic data for you guys, and my list includes GDP growth rate, which we got like 2 weeks ago, job openings, which we got like last week, and unemployment rate and non-farm payrolls that showed up today. Other than that, nothing happened.
Oh,
Absolutely nothing happened.
Yeah. Has anything else been going on, like geopolitically, or feels like not much?
Yep. And Venezuela, which we will get to. But let me just give you a slight, state of the union on what these numbers came in at. Actually, GDP for Q3, we were saying on annualized term, it's 3.8. It's a really good quarter. And then now we look at it, and the final print was 4.3%, blowing out of the water.
Yeah.
Q3
Huge.
GDP was amazing, right? Which kind of says, oh, the economy is doing well. Let's just not touch it. Like, do not fix something that's not broken. Then Q4 started to roll out, and inflation came in lower in Q4, which, prompts the narrative that we're going to have lower interest rates going forward. But also what came in was the job openings. So the job openings in December fell by 303,000 to 7.146 million. And that was the lowest it's been this much was in September 2024. And that was below our expectations of 7.6 million. We came at 7.1 million. What this tells us that the job openings that are out there, the postings asking for people or to get hired, etc., decreased by 300,000. This is a cooling labor market. This is supportive of lower interest rates. And I think the big news which came in today and why the markets are up is because we received the non-farm payroll, which are related to the unemployment rate. The non-farm payroll, just to give you a sense of it, back in October, we said, the economy lost 173 jobs. And then in November, we saw the data that says, the economy only added 56,000 jobs. And now December, this morning, we got the data that the economy only added 50,000 jobs. So kind of in Q4, we lost jobs and added a little bit. But if you guys remember, the Federal Reserve says, these specific numbers, I do not trust them. And my expectation, I think there's a bias of 60K every single month. So I reduce 60K from them every single month. So if you do that, then you'll get October with we lost 200,000 jobs. November and December, we did not add any jobs to the economy. So
weakening or softening job market.
Quite a contrast from Q3. And will that really mean that Q4 will be a negative quarter and, the Fed's prediction for the whole year being 1.7 or 1.9 materializes? We will see. But the jobs data are supportive of that. What does that tell us as of today is that this is more supportive of lower interest rates. So the whole drama that we had in 2025, now we can see that, probably more cuts are happening. The Fed has only communicated one. Let's see when they meet how they're going to be changing, the communication going forward. So this is on the economic front. Now the elephant in the room. Are you guys ready?
What is that elephant, Rabih?
The elephant in the room is the geopolitical macroeconomic event that happened earlier in the year, where the U.S. went in and captured the president of Venezuela, Maduro, and brought him here. The reason this is important is because Venezuela sits on the largest oil reserves in the world, and any political turbulence or change in policy in that area affects global supply markets of oil. I think they threaded the needle on having a series of actions that did not prompt a big reaction, because it could have gone any other way and we could have had many different market reactions. But they had a couple of things done right, I would say. Not like right politically, whether this is the right move, right in a manner that did not spook the markets. The first one is that it happened on a weekend, which gave a bit of time for market participants to settle. The second thing is that the Trump administration during the press talk said, what is happening is that we are now in the oil business. The president literally said that sentence. We are in the oil business. It's not that they are capturing that country's oil and they're having it for themselves. They are proponents of a free market. They're taking that oil, which was sanctioned, which was not being sold to everyone, and now they want to sell it to, they want to, even if they are the middleman, now it's going to have access to global markets. So that is number two, which did not spike fears. They're going to be selling it. How they're going to be selling it? Will it follow OPEC prices and global unsanctioned oil prices or not, is something to discuss. And the third thing, which is not what the US did, but was China's reaction to what has happened. And China just went out there and condemned through a speech, rather than doing many other retaliatory actions that could have happened. The reason China is the one to focus on out of this whole deal is because out of the countries that need oil, it's China, not the US. The US produces more oil than it consumes. The US is the largest producer of oil in the world. This has been the state since the US started fracking in 2016, and they've held that title. On the other hand, China is a net importer for oil. And the reason there's fierce economic competition between China and the US is because within this petrodollar system, where every single oil transaction should be settled in US dollar, giving the US dollar its reserve currency, there are a couple sanctioned countries that do not stick to these rules, and the US punishes. And do you want to guess who they are? It's Russia, it's Iran, it's Venezuela.
Yeah.
Right? So China, being another strong player in the global economy, bypasses the fact that some countries are sanctioned and buys oil from these three sanctioned countries directly in their own currency. So the fact that China, who really depends on Venezuelan oil, did not react as heavily, it seems like there's a deal behind the table somewhere.
I was just going to say that
oil is still going to be flowing. Oil is still going to be flowing, did not spook the markets. So what does this tell us overall, aside from the politics, aside from power gaps, aside from regime changes? This tells us that now there's more supply to oil, to the oil supply. This is favorable of lower oil prices in the future. But moving from now until you've had a fully functional infrastructure that contributes to that global supply chain, is as a waiting period. But this is where we stand. I think it's a crisis that is now in the background.
There's a little nuance to this too, right, Rabih? And as far as the oil that's in Venezuela, it's harder to and more expensive to refine. If I understand that correctly, it's like a heavier oil, harder to get out, harder to refine. So that's a factor here as well, as far as like I guess just I didn't know this until all this happened, that not all oil is created equal in regards to it flowing out to the market. This is going to be more expensive oil, which may not have, or which will impact most likely prices as well a little bit. The other thing, you already hit on it, but it just feels like there was more to this from like it being orchestrated. Perhaps some back-end deals already being done prior to the U.S. going in and getting Maduro. That's kind of the vibe that it feels like.
This administration likes to, it's like a TV show. Like when the Iran strikes happened, the 12-day war, it was like very orchestrated. This one seems very orchestrated, which you may agree or disagree, but we appreciate the fact that it's orchestrated. They're attempting at something rather than it just being total chaos.
Yeah. So would the thought here be, I guess the takeaway from a market perspective, again, leaving politics aside, that there's a high likelihood, just a pure supply and demand situation here, that there's a pretty decent expectation that oil prices will continue to come down.
Or there is nothing that prompts them to go up because there's abundance of supply.
Got it. The very least, stay static.
Yeah.
Got it.
No upward pressure.
Yeah. Taylor, let's get you in here. Any thoughts on
this? This is why we have Rabih. I mean, I was going through the headlines this morning, reading the news, and I saw the unemployment data, and I was like, oh man, the market's going to freak out about this. And it's just that like immediate reaction of like the way that every media outlet phrases it, it's all negative, right? So I'm reading this as negative. I'm like, oh, the market's going to react poorly. Well, then you check the markets and they're up, and you're like, what's going on? Like the headline's saying this, the market's doing this. And it's just a good reminder that there's so many factors that affect the market. It's never just the one headline that you happen to be reading, that morning.
This is why, Taylor, I've already had a couple of meetings with some clients to start the year. And inevitably you get hey, what are you guys like foreseeing this year in the economy and the markets? And I only laugh. Not at the question. It honestly is a good question, but I only laugh because I'm like, I wish I could give you a good answer, but I can't.
I laugh because I get the same question, Matt. I got it multiple times already in the last couple of weeks, and I laugh because they're asking me that question.
Yeah,
I'm like, of all people you could ask, you don't want to be asking me. Like, my response is always like, if I knew that answer, we wouldn't be working together because I'd have a whole lot more money than I do right now.
Yeah.
Right?
Yeah.
Like,
I'd be in Tahiti right now. Yeah.
So
here's the thing. No one knows.
No one knows.
Yeah. Like if someone ever tells you that they know, it's either they are BSing or they have illegal information.
Yeah.
One of the two. There is no other answer. So the norm is to not know. It's not a disadvantage not knowing.
Well, I think there's that common misconception out there that financial advisors are out there, reading the tea leaves, doing this, and they're making these, bets on what's going to happen in the future. And if your advisor's doing that, you probably shouldn't be working with them, right? But that's just not what a financial advisor's role is. Our job is not to opine on the future of the market, right? We're trying to help you make smart financial decisions, right?
I'm really glad you brought that up, Taylor, because that definitely is a misconception, and it's hard. It's a hard one to dispel because I think it's what sometimes people want to believe, like meaning they want us to be. They'll be like, oh, well, you know what's going to happen this year, right? Like that's why I'm investing my money with you because you know what's going to happen. And so it's to your point, Taylor, if you're working with an advisor and they're telling you they know, they're selling you something for sure. And that's a huge, huge red flag if your advisor doesn't have the humility to say like, and being transparent enough to be like, we don't know what's going to happen. That's not why we work together or the true value that we add. So and also, if you're not working with an advisor and you're considering it, I think it's a good expectation to have around, to Rabih's point, nobody knows. And anyone telling you that is lying to you or trying to sell you something, or both. They're probably lying to you to sell you something. So I just think that's a good reminder. I'm glad you brought that up.
Yeah, that being said, I do have blind faith in Rabih to have that.
Well, Rabih knows.
Yes.
We were assuming that when he said no one knows, he's not no one. By the way, we didn't even call this out. Professor Rabih taught his first class this week. We need to continue to bring this up because now he's in even higher regard for us. He's a university professor. He's officially has his name, the professor. It was the Lebanon legend, but I think it's the professor now.
Let me bring us back, and I'd like to say that I hope people hire us because we don't know. Because if we tell them we know something about the markets, we're committing to an idea that could be right or wrong. But if they're hiring us knowing, and they are hiring us for the fact that we do not know, they know that our intention, our interests are to make sure they are in a good position regardless of what the outcome is.
Yes, Totally. I love that you brought that back. What a way a true professor would do that.
You know, you guys are very noisy
Yeah,
students.
a professor, you know, when the little children get out of hand and they're, you know, off topic, it's the professor to bring everyone.
If you can imagine, I was always the student at every level pretty much of school that was always told that I was the instigator. And if I would just calm down, everyone else would calm down, and that they were separating me from certain people. So I'm shocker on that one. Okay, let's move forward. Thanks, Rabih, on that. We've firmly established that we don't know anything. Let's also comment on, we have to bring this up. Taylor's background has been upgraded and it looks amazing. I look like I'm in an insane asylum with my white wall here. Taylor just accidentally upgraded his background here.
Yeah, well, I mean, not a lot of accident. I mean, we are having another baby. There wasn't
I guess that was intentional.
That was intentional. But the
office switch was not.
I did move offices. I'm now in my wife's office, and I lost my office to the baby. So they kicked me out, and I upgraded backgrounds because women are a lot better than men at thinking about what's behind them.
Yeah, this looks great. Baby watch 2026. We're like a week out?
Yeah, we'll see. It's due date's the 18th, but Shelby has come early, a week early on all of her pregnancies. So that would mean
any day.
Could be this weekend.
So then the question becomes, Taylor, you want to get a Trump account for your baby? Like what's the deal here? You see that? You see what I did there, Rabih?
Expert move.
This is exactly why it was on my mind, Matt. So
yeah, you got to be thinking about this.
Most of the topics that I bring up on 2 Cents are coming from client questions. And I had many clients reach out about Trump accounts during the break, right? So if you don't know, if you haven't been paying attention, you know, it might just be your life stage, but there are these new Trump accounts for kids, right? And essentially,
and of course, he would name them after himself. Let's just be honest.
I know. I hope they get a better name, because it's like, I'm going to call these Trump accounts for the next forever.
It's set.
You know?
It's set now.
But basically, if you have a child born January 1st of 2025 all the way to January 1st of 2029, basically during Trump's presidency, if a baby is born, then they will get $1,000 into a Trump account, right? Now, what does that mean? What is a Trump account? How much can you do? What are the tax implications? These were all questions that I had as I was researching this for my own child and for clients' children that have been born and will be born in the near future. So these accounts are to encourage saving and investing early in life. This is not a stimulus check where you're going to get a one-time $1,000 and you can go out and buy a TV, right? So these $1,000 will be put into the account and they are inaccessible for any reason until age 18. So the hope is that you will take these funds and invest these funds, and that down the road, they will be worth something. So there's going to be that initial $1,000 funding, right? And then in addition to that, you are able to put up to $5,000 every year into these accounts. Not dissimilar to like a minor Roth IRA or, 529, where there's certain limitations and things that you can do.
Wait, Taylor, how much did you say you can put in?
5,000.
5,000 per year. And got it.
Right. So I was curious, okay, well, if you can put $5,000 a year, what are the tax implications? What are the stipulations surrounding this? So anybody can do this. This can be a parent, a relative. This can be a friend, neighbor. It could be an employer. So if employers want to set up contributions going to Trump accounts, they can do that up to the tune of $2,500. However, these contributions that you make to your children's accounts are not tax deductible. So you're not getting any pre-tax deduction putting the money in, but they are tax deferred, similar to some of these other types of accounts. But it will function as an IRA when you take it out, meaning when you take the contributions out, it is taxable to you.
The whole amount?
So double taxing.
The entire amount is taxable to you.
Wait,
right?
What?
And then I was just blown away. So if they are for qualified expenses, then they can be eligible for capital gains taxes, right? So if you use it for education purposes, down payment on a house, or seed money for a business, then the earnings can be subject to capital gains as opposed to income taxes.
But it's still taxed.
But it's taxed putting the money in. Like you're not getting a deduction putting the money in.
And then you're getting taxed on the way out.
Yes.
Whether
So
that be ordinary income tax or capital gains tax.
correct.
Wow.
You're getting
So-
taxed on your $5,000 twice before you
Yes.
put it and after you take it out.
Yep.
So
Oh my goodness.
it's not the contributions themselves that are being, I mean, like the earnings are going to be subject to taxes. So I might have misspoke there, right?
Oh,
So you,
okay.
if
So
you put in
so you have to track
5,000,
your basis.
right, the basis will still be there, right? But the earnings are going to be taxed at income rates.
Oh, that's what I was making sure of. Okay. So this would be the same thing as making like a non-deductible contribution to an IRA.
Correct.
But it's going to be on the person to track that with it, like with the
Well,
like an 8606 form or
So where
something. You've got to
both
track
of your
it.
heads are going, you guys are thinking about this the way I was thinking about this. And so I literally, as I was doing my research, I put this into ChatGPT and I asked the question, so are these accounts worse than a brokerage account?
Yeah.
And guess what ChatGPT said?
Yes.
Yes. They said,
I was like,
yes.
because it is.
They said, yes, these are, I want to just quote it. It says, short answer, yes. As described, it would generally be worse than a normal brokerage account for most families.
Yeah.
Right. And that's because, again, you can't touch these till age 18. And then
Yep.
if it's for a qualified purpose, then you can get capital gains taxes on it. But if it's not, if it's for any other reason, right, then you have to pay income taxes on the growth. Right. So
Yeah.
you would have been better off just putting the money into a brokerage account. And so
For sure.
ChatGPT then went to go on and say, like, honestly, the only reason why you would do this is to get the initial seed money from the government, which is a free $1,000, but there is no reason to be contributing the $5,000 extra.
Yeah. Yeah. I would. Yeah, there wouldn't be, because it's not like you'd be capping out on a brokerage account, like meaning, there's a cap on an IRA that you can, like a Roth IRA for a minor, but then any excess funds you have beyond that, just put it in a brokerage account. But I don't see a scenario where this makes more sense than just using a brokerage account, especially for a dentist.
Okay, let me cascade back. Is that the word we use?
Yeah,
Let me
cascade it back to us.
just to make sure I
Summarize for us.
understood what you guys were saying. So it is like a brokerage account, but it is worse for two factors. The first factor is that you can only put $5,000 into it. And the second factor is that no matter how long you're holding the stocks in there or your investment in there, when you take the money out, you're taxed at ordinary cap gain, not just the ordinary income tax, not the capital gain tax. Is that correct?
Yep. Everything, it's basically like a brokerage account, but instead of there being long-term capital gains that are taxed at capital gains rates, the entire account is going to be taxed at short-term capital gains rate or ordinary income rates. Right. With the exception of if it is for a qualified purpose of education, down payment, seed money for a business, then it will get capital gain treatment. But you can just get capital gain treatment in a brokerage account, not have the locked up till age 18 and not have the inflexibility that it has throughout the life of the account.
Yeah. You know what you could do as well is put all that money in a brokerage account, pile it all up. For a dentist, you could probably build quite a bit of money over 18 years, and then do a little be your own bank strategy, set up an S block, just loan the money to yourself, not get taxed at all, and help your kid buy a house or whatever you need to do. So there's so many better, I mean, I say that tongue in cheek, but also not really. Like, there's so many better strategies than what
you just said. Be your own
described.
bank, and like so many emotions and thoughts came to my head. But yes, that is a great.
You teach people how to be their own bank without using insurance. Yeah.
That's it, yeah. I mean, again, I was just trying to research this. I have no bias one way or another. Like, I have every intention of opening one of these accounts to get a free $1,000 for my child. And I wanted to see, well, are there benefits for me putting extra money into the account? And like, when I was reading it, when I was going through it, it was like, this doesn't sound very good. This doesn't seem like a good deal. And so I was like, hey, ChatGPT, is this like, what are the advantages? And the response was like, you're better off putting money into a brokerage account.
Yeah. Taylor, you probably already said this, but remind me, the account, you have autonomy how to invest it? How
Yeah, so a lot of it is conceptual. Like, there's really not answers at this point. So you have to, in order to be able to do this, you cannot open up one of these accounts until July 4th of 2026. So these accounts will be live July 4th of this year.
Of course, it would be July 4th. I kind of do love that. That's kind of great.
So same thing with the student loans. The new BRAT plan is July 4th of this year. So July 4th is like a thing. But July 4th of this year is when these accounts are now eligible to be open. But at this point, you cannot open an account because they're still figuring out the logistics, right? The only thing that you can do right now, if you fall in the category where you've had a child since, January 1st of 2025 or are going to have a child, right, soon, you can file IRS form 4547, right? So this is a
I
new
know it
form.
well.
Yeah, new form that we know and love, right? So you can file that with your tax return. So if you've had a child in the last year or are having a child in this year, the only thing that you would need to do if you want to get this extra $1,000 is tell your CPA, hey, I've had a child or I'm having a child. I want to file form 4547 with my taxes.
Also, 4547, very intentional there. He's the right. He's the
Oh, yeah,
45th,
true.
47th president.
Yeah.
Nailed
You
it.
got to respect that. You got to respect,
dude. I respect just the leaning in, just
Amazing.
all in on the branding. Yeah.
But yeah, form 4547. You can file that now with your taxes, or you can wait till July 4th when they're open. But at this point, we don't actually know where you can actually house a Trump account. I'm hoping it's just like a minor Roth IRA or 529.
Yeah,
like,
just like a
I can
brokerage
just
account.
do it at Schwab where I have my accounts. Like that
Got
would
it.
be really great from my perspective.
Yeah.
And I'm assuming that's what it's going to be like because, again, this is money that's supposed to be invested, right? So I'm assuming it's going to be available at any brokerage account or any custodian.
I
But
would
we'll
think
see.
so too. That would make sense. Just so you know, if you were to do that, you get the free 1,000. You are able to, let's say, set it up at Schwab. 18 years. I just did an 8% rate of return. You're going to be sitting on about $4,000. So there you go. Not bad.
Pays for, a semester of groceries and different things.
For extra money. Yeah.
Yeah.
We'll take it.
So, that's money that my kid wouldn't have otherwise. So
Yeah.
I'm going to fill out the form and,
take it. And then the rest goes in a brokerage account.
Yep.
So,
Yeah.
yeah, I think the takeaway there is there's other accounts, brokerage account and a Roth IRA. If you're a practice owner, far and away would be the priorities over something like this.
If you haven't had again, this is a very unique niche thing. It's only for people who have had or are having a kid during this Trump presidency, right?
Yeah.
But if that applies to you, I've had a lot of questions from that cohort of like, should I do this? How much? This really is not going to be an account that makes sense for most people.
No. Yeah. And let's be real. If a Democrat wins the next cycle, they're going to be shut down probably immediately, I would imagine. So it's probably a very short-term thing.
Well, I don't hate the incentive of, again, I was reading an article, this is specific to Utah, but all of you out there know that probably that we're headquartered in Utah. And Utah used to have the #1 birth rate, right? We had the most babies of any state in the country.
Do we not anymore?
We're not. Do you know where we are now?
Gotta still be top 5.
We're number 10.
What?
So
that surprises me.
We have the fastest dropping
Taylor.
birth rate of any state in the country right now.
Whoa.
So
that's got to coincide with the fact that we are I think the fastest growing state in the United States.
Well, housing costs have skyrocketed. Just the cost of having children across the country has gone up, right?
Yeah.
So it's a lot more expensive to have children than it once was, right? Utah used to be looked at like family friendly, affordable housing, and those things are no longer true, right? And so it's a lot harder to have children. And so there's a lot of things in Utah state legislature that they're trying to do to incentivize people to have kids with more tax breaks, more tax cuts. So, the Trump account could actually be a signal of things to come.
Sure.
We just don't know.
Yeah. Interesting. Okay. Well, more to come on that, but for now, not too hot on the Trump accounts overall, but get the free $1,000 if you can, if you're having a baby. Don't have a baby just because of that.
At least they're not. Yeah.
As parents, we can tell you that it's not. That's you're going to come out negative if it's just financial. I'll tell you that. Okay. Moving on to the last one. I want to throw this out, guys. I think we may have fixed, and I say we, I mean 2 cents. I think we fixed the housing problem in the U.S. Rabih, what do you think?
Well, I'm afraid the impact is too weak that it would be a failure. I would want to wait until it really happens and then we'll take credit.
Okay. I'm getting a little bit gung-ho on taking credit. You know how I am. We take credit for breaking strikes. We take credit for the housing thing. But all jokes aside, we did talk about this. We talked about this multiple times last year about this need to ban institutional investors in single family homes. And Trump, it looks like, is now taking serious steps to do that. So I thought it was worth talking about. But as I was doing a little bit of research and digging, I think you were alluding to this, Rabih. Turns out that it's not really going to solve anything. I don't think. I think it's a good PR win. It's a
Band-Aid.
good Band-Aid. But I don't know if it actually is going to solve the problem, which is we just have a shortage of single family homes in the US. And now, Taylor, you were just mentioning this. Maybe this is a step of more steps in this whole problem. Maybe this is step one and a sign of things to come, as you said. I still think it makes a ton of sense. I think from what I have seen, I think this is pretty much maybe the only thing there's only one other thing that Trump in both of his presidencies, his terms, has been pretty much fully supported by all sides. I think the first one in his first term was what he did with prison reform. That was pretty much collectively, supported and cheered. This, I think, might be the only other one that people are like, yeah, we are all on board with this. And again, it makes sense. So the idea is that groups like BlackRock and these other massive asset managers, institutional investors, are going to be banned from buying single family homes. But let's just give some actual figures. For purchases, the largest companies, the largest institutions out there own about 80,000 homes in the overall US market. That's around 3.4% of all rental homes. Landlords with 100 or more homes make less than 1% of all purchases. The groups that actually, this is interesting, I didn't know this. The market, the single family home rental market is really dominated by what they're calling kind of the mom and pop shops, like these kind of like smaller groups that own 10 or less homes. They comprise about 14% of home purchases. That was as of third quarter of 2025. I guess all that to say, at the end of the day, these large institutions, I agree, should not be owning single family homes. I think it's a great move. But is this all of a sudden going to solve the housing problem in America and bring prices down or make it more affordable? I think that's a pretty easy no. Good step, but not going to be the answer. I want to get your guys' thoughts on this.
Yeah, I think, we just hope that it's the first step of several steps, right? That we work together as a country to figure out and solve the problem. It's a positive step. This is, it's hard to think of bad things that would come from this, right? For the everyday person, this should be a really great win. And we just hope that it happens, right? I mean, that's where it signs, but nothing's finalized at this point.
Yep. Yeah, I agree. Rabih?
I agree with Taylor. And actually, the second step showed up this morning. If you guys saw the post on Truth Social, the president announced that, between quotations, his representatives, so that's still vague, but his representatives are there to buy $200 billion worth of mortgages to lower interest rates. And the 30-year interest rate dropped by like 20 basis points, and expectations are saying that it's going to drop by like 25 to 50 basis points, which means without any major interest rate cuts from the Federal Reserve, probably drops mortgage rates down to a 6% level, like flat 6. So this is step two. But if we zoom out and look at it from the economic framework, curbing, kind of restricting institutions from buying these homes curbs demand. It's really just shrinking the demand, which will allow other buyers to buy, because you're removing the big competitors, the big pockets out there. You're going to allow people to buy. But when you drop demand, you're removing the pressure to increase prices. When there's demand, prices goes up. He's trying to slow down the demand so prices do not go up as fast. And from the financial side, he's hoping he can prop up the demand back again by lowering mortgages. So he's trying to favor one type of buyer over another. Unfortunately, the housing market is too big for, one policy or two to make a dent. This could be short-term and short-lived, the impact of it, but at least it's a good intention.
Yeah, I think we all agree. I think it's good intention. Hopefully a step. And Rabih, to your point, there's already been additional steps made. I think there's going to be need to be policies around more building of homes, like encouraging builders, whether that these are all above my pay grade, but ways to get builders building more homes, whether that be through tax incentives or whatever it is. The fundamental issue is simply a shortage of homes. So again, good first step. I think we all applaud this move. I think most people do, and hopefully more things to come. So,
well, and even just to, piggyback off of Rabih's, what came out this morning about buying down the mortgages and bringing the rates down to 6%. Recently read an article, and in that article it said that 75% of all outstanding mortgages have a 5% rate or lower. So even with this dropping mortgage, it's only affecting a quarter of the market, right? At best. So there's still so many homes out there that are sub 5 that, this is even these 2 steps. There's still a lot more steps to come if we want to solve it.
Yeah, it's a great point. Yeah. With such a long run of such historically low rates that it's just like got people stuck in those homes. So totally right. Yeah, you're one of them.
This guy right here. This guy.
Yeah, you're one of them. Okay, guys, anything else you wanted to add? Any other final words of wisdom?
We're gonna be missing you.
I know.
You come back.
Thanks for letting me come for one more show before I'm out for hopefully not too long. The goal is a couple of weeks, but
yeah, Matt and I are both taking time off together. I don't know what's worse. He's having back surgery. I'm having a child.
Yeah, I'm spine surgery, having a baby. Who's really putting in the work? I don't know.
You're laying around all day. Really,
I'm going to be laying around.
Easy.
So
Easy.
Let's just hang out.
Yeah.
You're going to be out for a few weeks too, so you won't be hearing from Taylor and I for a bit. We want to shout out Launchpad again. We're super excited. We're about a month out now from Launchpad launching. So this is going to be our 12-week live program. All of them will be on demand, so you can get access to them as well. Signups are now live. So we built quite a large waiting list, and then we opened up actual signups for this first cohort. You still have time to sign up. You can go to dentistmoney.com/launchpad for more information. Professor Rabih is going to be teaching. I might teach one or two. Taylor, we got Daniel Crosby, Carl Richards. We got a really solid crew teaching you everything about money that you did not learn about in dental school. So super excited about that. Go to dentistmoney.com/launchpad. We would love to have you for our first cohort. You can say you're the first if you do it. You can say you were the first one, which everyone wants to say.
Honestly, this is pretty sweet. Just the fact that you have Carl Richards, Daniel Crosby. Pretty big names doing this for a really small group, right?
Yeah,
small cohort.
Really cool.
So it's a really, really cool opportunity if you want to get in on, especially on this first
honestly, it's going to be cool. And we have office hours. You're going to have the chance to meet with our advisors one-on-one at the end. You're going to get a full plan at the end. So it's going to be super. Our goal is to make this kind of that first step in your financial foundation coming out of school and entering your career. So we're really excited about it. So you can definitely check it out. Sign up for this. It starts February 6th is our first class. So we're about almost or just less than a month out. So for now, Taylor, Rabih, thanks for being here and sharing all your words of wisdom. Everyone, thanks for listening. That was our 2 cents. Until next time, bye-bye.